Hey, greetings traders. I thought it might be helpful to go over a recent swing short gold trade and where we are, given that futures, if you will, showed a pretty hard sell-off on comments that Yellen had made in regards to the dollar being not wanting it to be too weak. Well, it's a holiday. I'm doing this on Sunday, but it applies for the week, and it applies on a short gold trade that I've had in place since August. So let me go over that a little bit and talk about it, since I think it might be relevant to those who play the gold and precious metal sector. But this is an update that I had sent to clients back on January 11th, and that was that I believed that gold, silver, and minor short had legs. And this was in follow-up to two other client posts, one from August 8th, where I had said gold, silver, and miners were due a rest. I happened to time that top really well. And there were reasons for that I explained for clients, one of which was that gold was 4 standard deviations away from its 200-day. And that had only happened 2 other times in 30 years, and I expected that to be tested. And the second was my bullish percent index for gold miners was reaching an absolute top in extreme and was most likely to pull back. Well, I doubled down on that call several times again in November near a secondary top that gold lacked a short-term catalyst and suggested pressing short, even though lots of gold bulls were mentioning that it was really a great time to buy. It wasn't. It was a great time to buy the new gold, Bitcoin, but not the old gold, as fiscal policy had been kicked down the road, if you will, in anticipation of a Biden bid into the election, and then the Pfizer news of a vaccine, et cetera, et cetera. So basically, this was my recommendation that this would continue to be bearish gold, and I didn't see the QE printing right away, and basically there were some macro reasons behind it, and I definitely was comparing it with interest rates as well, and the whole yield curve control and things that are macro to micro, in short, that I would outline for clients. That was the logic behind the reason for being gold, in addition to a technical setup, and where I would see this thesis tested. So flash forward to almost a month and a half later, January 5th, and I had written that gold miners and gold, the rest, had done a really great job of bouncing off support, which happened to be the 50-week, but that now I saw gold and bonds ready to fall before setting up for a very big run next year. So it happened to be on the 5th, and we had a very large drop that week in the precious metals complex, and I supported that evidence, if you will, with my my gold miners bullish percent index again, saying we're at resistance. I expect resistance. And sure enough, we fell. We're still not in a viable area, in my opinion. And I followed that up with the gold SPX ratio, which again is kind of the macro narrative plus the intermarket, as well as the dollar trade. I had expected dollar would bounce, and with that, this would be a fake breakout. By the way, this is gold inverse, in the same way that I had timed this breakout. Remember, this looked really great, and then all of a sudden it gave up. Same expectation here. Also spoke with my partner in crime on my Tuesday macro to micro power hour, Jonathan Gibbons, that we both expected that to be a failed breakout. Sure enough, the dollar has since rallied, and that has precipitated a further fall in gold, and a sudden one at that. Then just last week on the 10th, we had a very bearish weekly engulfing, which means, yeah, we might have a little bounce here into the channel, but then I expect that to be retested to the downside, and basically that has happened exactly textbook. So where are we at now? We have gold in about the 1800 range. GLD is in the 170 range, and I expect some lower moves before we get a sustainable bottom fishing pattern for moving higher, and it probably won't be until spring of short term. I think it has some work to do on the downside before I am going to recommend it long to clients. I invite you to become a client so you can learn when, in fact, I recommend the bounces as part of this counter trend short in gold, as well as the basing, which will become a very nice duration trade longer when it's time.